What's going on, guys? Welcome into another episode of Money Moves. As always, Matty A, my co-host, Mr. Breedwell. What up? We cover all things stocks, real estate investing, politics, personal finance to help you on your wealth building journey. If you're new here, welcome.
Welcome.
Don't forget to check out millionaireMindcast.com for all the great stuff that we got available for you guys. Any links, resources that we talk about in the show, you guys can find those there in the show notes, as well as if you enjoy the show, the best way you can support us is just by taking 60 seconds to leave a review, iTunes, Spotify, whatever platform you enjoy listening to this content on. Today, we don't have a ton of...
It's a leaner week.
Data that's coming out. I'm going to give you guys some updates on what's going on. NAR, National Association of Realtors legislative event where they share a lot of their economic data and takes. I'm going to share some of their discussion points on different commercial real estate asset classes, talking about, we do have some updates on home prices in single family, rent growth, where inventory is at, as well as I know you got some updates in crypto.
Yep.
We've got some hot takes on when they're going to lower, you heard it, lower interest rates. And earnings season is really the bulk of the reporting that's coming out this week.
The first wave of earnings season.
Before we do dive in, just some current events and headlines that have been coming out this week. TikTok sues the U.S. government over law forcing sale or ban with a violation amendment is their argument. We saw this one coming.
Yep.
This is the first of many steps that they're going to have to ultimately take in order to fight.
It should take about 6 months.
Is that what the timeline is projected to be
around
6 months?
There? Yeah, about 6 months.
Interesting.
Yep. Which in a lot of people's opinion, and actually is like, I heard that analysts were saying, you guys should just not waste your money because you're just going to waste your money. And then you're going to just decide not to sell it and leave the U.S. So either decide you want to not do it and cut the cord now, or redesign your algorithm and sell it to a U.S.-based operator so they can operate your product and you can make a royalty and revenue off that. I think that they're probably going to say buy and just leave that product because they're going to be like, we can't compete with Reels because they have Facebook and Instagram integration. Even though our algorithm is better, which I believe it is, they're not going to give that up because that's their bread and butter. And if they give that up, that really would take all the wind out of their sails for their company. But there would also be data that would show how their other algorithms work because it's all from the same basis. So
right.
My opinion is they're not going to sell to a U.S.-based operator. They're going to close down their U.S.-based operations and just take their business elsewhere. And then people will still access them through VPNs.
We have seen protests continue to run rampant across college campuses, definitely in the UC system here in California.
Yeah, pretty silly.
There's been a lot really all around the country, which is wild. I understand the right to protest and to protest peacefully. When you look at some of these campuses and how they are getting ravaged, I feel terrible for a lot of the students that are just trying to go to school and get an education and not be disrupted by all the mayhem. And what they're actually finding is a lot of the people on these campuses are like 40-year-old anarchists that have they're not even actual students.
Correct. And there's a right to protest, but there's not a right to cause disorder, threaten people's lives, or be racist. It's really eye-opening, I think, to a lot of people to see that right now, the same group of individuals who were during COVID claiming racism, that cops were racist, and they were claiming how white people are always racist, are now singling out an ethnic group and religious group and blaming them and pointing fingers at them, which is, I think, the equivalent of if I was to go to somebody who's an African American and there's apartheid going on currently down in South Africa and in other parts of Africa and blame them because the color of their skin is the same and they're African American. It just doesn't line up with like common sense.
The hypocrisy is crazy.
Yeah.
It was very interesting to see this report come out from Politico. The fact that the mainstream media is reporting on this and actually posted this from, I don't want to say a left, but Politico is, I guess they're somewhat central, but usually they're left-leaning.
Mm-hmm.
They just released a big article this week that some of Biden's biggest financial backers are the ones throwing support behind and funding the Campus Gaza demonstrations. The donors include some of the biggest names in Democratic circles, including Gates, Soros, Rockefeller, and Pritzker. Like, the fact that they're actually kind of affirming that and saying that out loud was shocking to me, to be honest.
Yeah, I think that people are waking up to it's pretty extreme what's going on with the current administration. And I do know there's a subsect of people that like that level of extremism and being coddled and being helped by
very small.
Yeah, it's the people that are protesting, extremely liberal people, socialistic people, type like that, people that like communism and stuff like that. Those are the type of people that would fall into that category. I think that this current administration has already put the nail in their coffin. I think it's highly unlikely that they're reelected. There's just not. Trending on X the other day was people posting pictures of themselves, and it was supposed to be young women, and the post was, my name is XYZ, I'm this age, I'm from here, and I'm not voting for Joe Biden. And thousands, and it's younger people that, and it was, the goal was people that had,
Trumpers have said,
it was for people who had previously voted for him and who are not now, to make the statement of how many people are flipping. And he was speaking the other day at a rally, and he verbatim said, if Trump is elected, he's going to cut taxes. And if I'm reelected, I'm not going to cut your taxes. I'm going to raise them.
I wish I could pull that video up because it was hilarious.
He straight up said that, and
I was like, hey, at least he's telling the truth.
It wasn't a miss. He means he's going to raise taxes, and the fact that you would say that, it's just wild.
He went off script. He went off script and told the truth.
Yeah, I think that the funniest thing is his back was to his teleprompter too. He was talking to the crowd behind him. I think he meant to say
it was really
he's going to raise corporate taxes. I think that's what he meant to say, which is probably a good idea. As a corporation, we could do a lot of things paying a little bit more in our taxes.
There was a recent kind of video clip of Tucker Carlson saying the same thing. There's no way that this administration is going to get reelected. And it's likely, based on polls, based on momentum, based on everything we're seeing, that Trump is going to get elected to his second presidency. And if not,
pumped.
It would ultimately be democracy, in his opinion, based on what we're seeing in the polls, based on what it feels like the realities are, and pretty black and white as to who's winning, who's probably going to win, that it would be a farce of democracy.
Oh, agreed. There's no sane person with no bias, or at least if they have a preference, they can remove their bias and look at like factual data, which I think me and you can do pretty well. You being more center-leaning, maybe to the right, me being somebody that definitely is a Republican, I can remove that and look at stuff and understand if I'm going to lose or if I'm going to win.
Yeah.
I don't know how this current... I don't know how this administration... It's the lowest approval ratings ever for any president. He finally went lower than Mr. Carter.
All time.
The lowest polling in a re-election year ever for a president. I just don't see it happening. It would be exactly that. It would be clear to me that there was some sort of fraud that or non-truthfulness that took place to get that.
Well, and I did see a recent push from the RNC to not allow counting of votes to take weeks.
Oh,
and
agreed.
To be done in a transparent setting where there can
be... In other countries, people can literally just walk in and watch people count. I don't know why that's... I get that you can... make hey, don't cross here because we're working in this area. But in like China, for example, even when they vote for things, or other countries that are doing votes, they allow people to see the votes. They have live streams of it. People are allowed to see the votes go in. They see where they go out. There's no...
When they're done with.
They're done in a day or two.
Yeah.
Yeah.
Exactly.
And
it's not taking
it's months and months and months and months.
Big spikes on charts go up overnight.
Yeah. Ballot harvesting should not be, in my opinion, legal. And we should just do in-person. I vote, just so everybody knows when I say this, I vote by the mail, but I go drop my ballot off at a Republican's office that I also vote for in our county. So I vote by mail. I do not go to the ballot boxes, but I think that it would reduce the amount of fraud because my parents, for example, moved from California to Nevada, and my parents were laughing because they literally got their California voting thing. They're not They're not citizens or
voting on.
They're not. Yeah, they're voting as. Yeah, they're not a California citizen. They're Nevada citizens. But they could fill that out in Nevada, send it in, and it would count as a vote. And it's just like, how do we have all these? I mean, our credit card system is more complicated than our voting system and much less important.
Yeah.
So I just don't get how we have all these higher level security things and much less important stuff. But when it comes to voting, it's all loosey-goosey. We can't figure out how to digitize it without there being fraud. It's just ridiculous.
I would just say, in my opinion, it's by design.
Agreed.
For a reason.
Agreed. It's obvious at this point. We can.
Well, I think people are wising up to that now and going, if we're so advanced over here, but we're so old and ancient and loose on things like this that means so much and carry so much weight. And come on, let's start to get it up to the 21st century.
You called Tesla a boring company or something. Not that I'm like a diehard Elon fan, but just somebody that would literally take it seriously. They would have that fixed in probably under a year. Yeah. They would figure out how to do it. They'd figure out how to make it democratic, so everybody had a fair say. They'd figure out a system.
You would just want to trust that it's fair, and if we lose fair, you lose fair.
If
you win fair. But
and I don't know
when
why
people lose that trust, that's where things really start to. Because I would say, at least from my personal opinion and experience, my levels of trust and all of the main institutions that once did have
lowest
trust,
it's ever been.
Yeah, for me personally,
Same.
it is by far the lowest.
Same.
And so I just hope that when you think about democracy, you want to be able to trust in the institutions that you're bestowing that trust in.
You want to have fidelity in them.
The way they were set up to operate.
Agreed. And where your tax-paying dollars are going to fund their operation.
Correct. I will say this. I am loving, and it's funny, like when people talk about patriotism now, it's like almost like nationalism, extremism. You're a racist, a bigot, you know. And to me, I love seeing people really. I'm seeing more and more celebrities now. I'm seeing more and more college students step up. Like when we
especially the fraternities at the campuses,
when we see this stuff show up on your front doorstep, you're like, I'm not racist. I'm not a bigot. I'm not intolerant of other people's cultures. I'm just really proud to be an American. And I would think anybody that has come over here, which is a mix of anybody and everybody, they should be proud of their country as well. And seeing so many students stepping up on campuses. So one of the encampments, they had the Star Spangled Banner playing on repeat overnight in this pro-Palestinian camp on blast with these massive speakers. You're just seeing more and more people going, no, we're proud to be American. Let's act that way.
And the hypocrisy to say that's racist, because America is literally a melting pot of, as a long time ago and still currently, but we don't originate. We're not domestic Americans, right? America is a melting pot of many different countries, consistently gets mixed with different countries. We have great neighbors to the south of us in Mexico. We have neighbors to the north of us in Canada, which is a mix of French and all sorts of other stuff too.
Absolutely.
We have great people from China, East Asia, Indian people in a large population, especially in our area, which is a great boost to our like tech and security, medical. We are a melting pot. So to say that it's racist to say you're nationalistic to be an American, I think it's you're a hypocrite for that, because the definition, I think, of being an American is being open to legal immigration and migration from other individuals that have something to add to the bottom line, because capitalism allows everybody a fair shot. There's definitely leg ups coming from a successful family, having a 2-parent household. Things like that can definitely give you a leg up in the world. But capitalism does a really good job of trying to moderate that the best it can and giving everybody at least a shot. And I think that's why America is, and probably will be for a long time, as long as we keep those principles, a desirous place for people to come. Yep. Because people that come here and then see people acting like these protesters are, head scratch, because they're like, have you never been anywhere else? Because this is pretty damn good.
I mean, you talk to people that have fled real communism.
Oh, yeah.
And they're straight scratching their heads going, You don't know.
There's a lot of
communism.
Chinese
you have
people.
no idea what you're talking about.
There's a lot of Chinese immigrants I've seen that came to this country legally.
You see the woman who stood up at that.
At the meeting, and that was the most recent one I saw. And she's, do you not understand how many people died and starved to death while they paraded people through to cameras and to the media? But what was really going on, that's communism, and that's not something that is good.
Yep. And that's why America is where it's at, where I think it's going to continue to go by protecting those things. And as you said, right, you've always been good at saying, whether it's with your finances, whether it's with politics, when the pendulum swings too far one way,
it has to come back.
It always finds a way to recalibrate. And when it doesn't, that's when...
I liked it to recalibrate in the middle this time. I'm not trying to be... team, hey, now it's been that far, let's go this far to the right, because that would be BS.
That's
too.
not good for America either.
No, it needs to be in the middle, and it can lean a little bit to the left sometimes and a little bit to the right sometimes. But if we can get back to politics where it was 40, 50 years ago, people are different, people moderate each other, people understand they have disagreements, but at the end of the day, we all live in America. We all got to have each other's backs. We all got to put and push forward for America to be better, because that grows our economy, that makes the world around us better. And then we can fight about the fickle things in our politics on the side. But it really is fickle little things that people get caught up on. And I think the thing that I'll end on is, if people would just talk to other people they have disagreements on, but instead of focusing on what they disagree, talk about the things that they agree on, they would quickly find compromise in their thought process.
And there's way more that they agree on than...
There's going to be instances...
It's just big issues that people allow to overshadow the collective group of issues that all weigh in and impact people's lives, our society. But there's certain key issues that are owned by each party that... they find a way to suck people into those things.
Yeah.
I'll end with this, and we'll digress out of politics. And the only reason we talk about politics...
it affects your money.
It affects your money. Policy affects your money.
Yeah. Legislative risk, y'all.
And that's a true definition in the financial
systemic
world,
risk. It's
right?
one of the many systemic risks, something you cannot diversify away from.
I thought this quote was interesting, and it's just something to ponder. Is the same people who angrily demand you tolerate and accept their way of life hate you passionately for yours. And I'm not saying that's all people, right? Like, I'm never a bit believer in one statement fits all. Yeah. But that being said, it is interesting how most of the people you see that are on either side of extremism, right, side or left, right, are the people who want you to accept them so bad, and they're hypocritically
because they don't accept you,
demonizing you for the way you are, right? Yep. So it's just very interesting the way we as humans in the psychology works and drives our decisions, our communities, the world, our financial decisions. But we're in interesting times, and that's why continuing to have these types of conversations and spotlighting these topics, I think, is really important. As we move into reports from this past week, non-farm payroll was one.
Great. Unemployment was
great. Get us
great.
up to speed on what news came out. What does that mean for the economy? What does that mean for rate cuts?
I was just waiting to see if you were
What does that mean for the market?
So we had unemployment rate tick up to 3.9, which typically a rise in unemployment is not something we would celebrate, but I think we touched on this in last week's episode and maybe a couple times earlier this year, that right now bad news is good news, similar to where we were in 2020 to 2021, because we want those pressures on the economy to give the metrics that are measuring inflation in the economy the correct trajectory, and that's down. So when we get a rise in unemployment, that will loosen the labor market because it's pretty secularly tight still. And then we also have non-farm payrolls and private payrolls coming in lower, meaning less jobs were added month over month, which is a very important thing because we don't want a ton of jobs, because if we have a ton of jobs and we keep adding more jobs than expected, that's going to lower the unemployment rate.
Yeah, it was... non-farm payrolls increased by 175,000, which was below the 240,000 estimate that they had.
Yeah, and that's a good enough spread to make it substantial. If it was like 225, it'd have been like, all right, that's not right. But we're $1.75 to 240 on those numbers. That's a wide enough spread to make a difference. Earnings through last week and into this week, with a couple big companies having some serious misses, but the majority, I think it's still over 80%, and maybe north of 85% right now, are reporting strong earnings, big beats, not only on earnings per share, but also on revenue. And they're giving strong guidance moving into the fourth quarter or through the late year into next year. We had some automakers report. We had Lucid Group report. That's the Lucid cars. They announced they're going to make an SUV this year. They announced they're going to have a mid-size SUV in 2026. That was good for their stock. They still reported a loss. Rivian reported, I think they had a beat on revenue and a loss on earnings per share, which is normal. This is if anybody remembers Tesla pre-100 or pre-$50 billion market cap, this is how they were. Hey, we're not making money on our company yet, but we're making more money than we're spending. We just got a lot to make up for. So they had a revenue beat, which was a positive to see. I think I told people a couple weeks ago that Rivian was something that was interesting to me because they have a very loyal fan base. I think their fan base is a higher net worth Tesla type owner. No digs. I'm a Tesla, folks. And their people will spend money on those cars. They're more expensive. Yeah. I will say they're a nicer car in my opinion, and they have a better build quality in my opinion. Again, nothing wrong to my Tesla folks. So that is an interesting stock that I'm looking at and just keeping an eye on. And then we have other companies like Apple announcing their M4 chip's going to be in the iPad. I think their iPad releases next year, but that gives them a catalyst to the end of the year because we were looking for it. They haven't released a new iPad.
They pulled back on the car.
They pulled back on the car. iPad sales have been down, I think, 7-ish% year. So that's not good because they haven't released a new model. It was just like, hey, the battery's bigger, or hey, it's a different size. Oh, we have a mini. It's just a smaller screen. So I think they were trying to develop this chip, and they finally finished it. And I think that chip, don't quote me on it, but I believe there's AI built into it. Samsung is on the forefront of that and already has that built into their new phone models. So to digress, a lot of these big players are reporting very positive earnings, giving good guidance.
What about Disney?
I was going to bring up Disney. I was going to say something on energy we had some energy acquisitions, which means there's some free cash flow being deployed right now. So that's good. Disney didn't have a bad report per se, but a lot of times companies can give good EPS and even have a revenue beat, but then give poor guidance, which means, hey, it almost sounds like, hey, we had a good run, but the party's over.
Down quarter.
Correct. Now, sometimes companies do that in order to set themselves up for fair expectations or to have analysts write down their expectations so that's easier for them to meet those metrics. But really what Disney did is they didn't give super strong guidance, even though their park attendance was up year over year, believe it or not, I think 9%, between 7 and 9%, excuse me, and their in-park sales were up. Their streaming services are having a problem. They're not profitable, and they were expecting them to be, or they're not as profitable as they want them to be. And I think what a lot of these streaming services are finding out, which is why we saw the bundling of a lot of these companies over the past 2 to 3 years, is Netflix was the first to market, and they got so far ahead of the market, and they have such a firm grip. They will be like Tesla is to electric cars. Yeah. When people...
The category king.
Think of it this way. When you grab a tissue to blow your nose, you call it a Kleenex, but that's not what it is. That's just a brand of company that makes tissue paper.
They're the category king.
Correct. There's all sorts of things like that. And so I think that Netflix is going to be the category king for the foreseeable time, or for the foreseeable future that I can see as the streaming giant, because they continue, even though we were getting on them for not reporting, they're not going to report new subscriber data anymore, or that's what they said. They can pull back on that. I just don't think they have to.
Yeah.
They have their own studios. They have a lot of contracts with other studios to make pretty quality movies, I would say, right now. When you produce your own movie, you sell it on your own platform.
Netflix is great,
man.
Yeah. It's
I would wish they're a little less.
Netflix.
Shout out Dana White. I wish they were a little less liberal, because they do have some things that are like, okay, come on.
Did you see the Tom Brady?
Oh, I saw the highlights of it, and I was like, holy shit.
That
was aggressive.
Hilarious. And they've been knocked for being woke, and yet they gave the comedians free reign to do and say whatever they wanted.
Well, they were
live.
live.
Let's just say they went after some of the... And I loved it. I love that they checked all the boxes they needed to check, but they gave them the latitude to say and do what they wanted. It was... Marie and I were laughing our asses off.
When he said like a black... For that African-American comedian, he was like a lesbian something. Is like Netflix checked 3 boxes with this one. I was like, oh my God.
It was great.
I loved it.
If you haven't watched that, you don't need to be a sports fan because they roasted Tom Brady, greatest quarterback of all time. They
roasted everybody.
Oh, they roasted.
If you sat there,
if you were in the seats and you were, because there were celebrity faces everywhere.
Kim Kardashian got drugged so hard. So yeah, it was pretty funny. I've only seen highlights of it.
It was good. It was worth the watch. It's long. It's almost 3 hours, but they did live streaming and they kept saying, "Hey, it's streaming."
And this goes to my point. Netflix at that level. That used to be on like NBC or ABC.
It was, what was it? It was Comedy Central, which was on like...
But now Comedy Central's on Paramount Plus.
Right, but I'm just saying before, this is the first one they've done like that.
They started doing the live comedy shows, like Cat Williams' special.
Yep.
So what they're doing is now, this is where you can see a company that has, again, I'm not advising anybody to purchase Netflix or anything like that. I'm just talking about the company as a whole. They're now starting to get into live entertainment because they have a grip on the corner of streaming entertainment with shows, documentaries, and movies. How do we now get people to watch us not only at night or in the middle of the day when they want to commit to
not at your leisure. No. We want you here at this time.
And then, oh, by the way,
during this segment,
if you miss it, don't worry about a DVR. It's just right there for you already on our platform that you're a subscriber to. So they're starting to get into, I wouldn't be surprised, and they don't do this now. They're one of the only players that doesn't do sports.
Yeah.
And I think that was a strategic play, and I bet you
because Disney and ESPN are
correct.
Right?
And I think what they said is, we're going to not be the jack of all trades. We're just going to master a majority of the lanes we're already in, because I do think that Disney Hulu will probably have the hold on that because their ownership of ESPN. Mm-hmm. And I saw that a long time ago, I think, without even thinking it, because if you think about, I use YouTube TV for myself, which is a Google product. They have the rights to NFL Sunday Ticket. I would not be shocked for a major bidding war between them and Disney Hulu or ESPN Plus or whatever it is to get that contract when it comes up again. Because that was a huge blow to DirecTV when they got that, because DirecTV had it for 25
years anymore.
DirecTV, now it's DirecTV Stream.
Exactly.
They even had to.
That's what I'm saying. Like they've somewhat gotten swept under the rug, and they had to rebrand.
You know who uses DirecTV?
Who?
Pops.
Oh, older folk.
My dad, my parents use DirecTV Stream, and I'm like, why don't you just get like a different TV show? Oh, we just like DirecTV.
Yeah,
you know what it is.
Yeah, it makes sense.
It's almost like why their emails are at spcglobal.net. So yeah, exactly.
No, I think it's good to talk about these things, right? Because just the fun dialogue around thinking about where the puck is skating towards can also help you identify some of the companies that you think are leaning into that, and where the growth and where the value might be. Disney got crushed on their...
Down 9.5% today.
That's a big deal, and yet... Do we think Disney's going anywhere over the next 20, 30, 40, 50 years? Probably not, and therefore there might be some value there just by talking about some of these things.
Yeah, look at their data. It's 7% more people have come to our parks in the last 1 year versus last year. So we're 7% up, and that is a huge number of bodies, and the margins on their purchases in parks are massive. Yeah, they make a lot more money on people coming to their parks than they do anything else. That, and margin-wise. That's just super important. So that can identify, of course. It's almost like the Starbucks thing we were talking about. Mm-hmm. You can't fade Starbucks out of the coffee industry.
No.
They are too much in it. Are they going to have pullbacks? Of course. Same thing happened with GE a few years back when they were spinning off their arms because, hey, we're way too much for one company, so we're going to spin off in arms. Kellogg just did that. They said, hey, we're going to have one focus on cereals and then the other focus on snacks. Pepsi does that with their beverage division and now their snack division. So Pepsi Frito-Lay, I think it is. Mm-hmm. So I think the thing that will good companies divest and do things like that. And
they just pivot and adjust, right? You're not going to win 24/7.
What's the thing I'm trying to think of? It's adapt or die.
Yeah.
All these companies are adapting their business models to the consumer that is also growing and changing because they were adapted for our parents.
Yep.
And now that our parents are aging out and becoming less of the majority, they're not
You
going
got
to
millennials and Gen Z that
Correct.
are ultimately the majority of, not the majority, but they have stepped into the largest purchasing power generation right now.
A lot of
that societal structure, marketing, messaging, infrastructure is going to be starting to shift and cater towards them. So I think the best companies will have little blips on the radar, but they're playing the long game and they're not dumb. They're not going to just stand on their hill because that's the hill they've been on forever. They're going to figure out how to navigate to the next mountain.
Correct.
And that's ultimately what good companies do, and paying attention to those companies and how they do it can give you some foreshadowing or some insights into which ones you may want to bet on long term. Yep. Speaking of some consumer shifts, consumer credit card reports came out this week, which
Today.
I know you felt very positive seeing what just got reported. $15.3 billion in consumer credit card debt just got paid down to $6.3 billion, over $9 billion wiped clean from consumer credit card debts. What does that tell you, and why is that important?
That tells you that the consumer had a lot of cash, like it was showing. The consumers are responsibly spending and servicing their debt, even though $6 billion in credit card debt is huge. And that frees up for whatever consumers were in that $9 billion and then have that paid down. That frees up cash flow. That cash flow will get spent and or invested and or saved, and that will translate through into the economy. So when consumer credit card debt, which had gone up, it was at 15, it went to 15.3, but now it's back down to 6.8 or 6.3. That'll always be a couple billion, but in the range that it's in now is more normal than in the teens. The teens is just aggressively high, and that it makes it so if there is emergencies or there is a shock in the economy, people can less absorb it even more. So it's all around a good thing. And the data, the trends are still leading towards that there's likely going to be rate cuts this year. I know that's been yo-yoed, especially by myself, around so much this year because we use the stock market as an indicator, and the stock market is forward looking. And things just kept changing so quickly, sometimes overnight, like with the geopolitical risk for that blip with Iran and Israel, which, shocker, that went away. It just, things change so fast. But it's getting to the point where there's less and less. The walls are narrowing in to where it's easier to figure it out. Not in the June meeting, even though there's about a 9% chance right now that there's going to be cuts. They're going to pause in that June meeting. But I wouldn't be surprised if in the July meeting, if we had really crazy good data, there could be cuts. But probably if they would indicate that, hey, things are going in the right direction. If they keep going this way, in September, we are going to cut, because that gives 60 days of no meeting for a lot of data to come in. And that's why March was looking so good, because the January had to set up to say, and then we had that 2-month break. Yeah. And then what happened in that 2 months? Bad data came in, and so they pulled back completely from that. And that's why we saw the pullback in the market from April to beginning of May now.
Yeah. Coming over to the real estate side of the fence, the latest news of some of the cooling in the labor market and what we've been seeing with other data continuing to come in is potentially the topping out of mortgage rates. That's something that the National Association of Realtors, Chief Economist Lawrence Yun, has started to allude a little bit more confidence in the fact that maybe mortgage rates have topped out as we continue to see maybe more declines in some of that data, right? The bad data essentially being good data for, let's just say, mortgages in this particular case. Home prices, U.S. single-family homes rose by 5.3% year over year in March, marking the 146th consecutive month of annual growth. Over the next 12 months, year-over-year home price gains are projected to range between 5.6 and 3.7%. We're definitely seeing some of the hot, overinflated markets like the Austins, like the Phoenixes, like the Florida markets. Those have seen a major uptick in inventory and a major slowdown in absorption. So we're starting to see some pullback in those markets, but other markets are still seeing some relatively moderate and healthy growth in home prices. Rents are up 0.5% month over month. They're down 0.8% year over year. And rent growth usually follows a seasonal pattern anyways. Rent increases generally take place during the spring and the summertime, right? Because that's usually when there's some shuffling going on and people moving around, whereas the fall, the winter times is usually where you see a little bit of a modest price dip. As of inventory, nationwide, Altos reports that active single-family inventory was up 0.6% week over week. It's now up 13.3% from February, the February bottom. And it is still down 36, almost 37% compared to the same week in 2019. So we still have relatively healthy inventory levels to at least backstop values, right? And we're not seen as insane demand as we once were. So we're seeing a relatively moderate, I would say, cycle right now for home sales and home values. And then in terms of housing shortage, we're still about 5.5 million homes short. Now, one of the bigger reasons for this comes from demographic changes, which is people are living longer.
Yep.
That's something that home builders didn't bake into their plans and their projections a decade or 2 decades ago. So there's this constant catch-up that we're still trying to play. And then you factor in, depending on where the building is actually happening, some states are very pro-development and make that easier and work with developers to do that. Or you got states like California where there's insane amounts of red tape and it can be very challenging, much slower of a process. Hence, we have a major housing shortage in California, right?
Yep.
In some of those states. So just things to be thinking about, things to strategize and layer into some of your thoughts if you're a real estate investor. NAR Legislative, their conference, they just released a bunch of stuff on multifamily office, industrial, hotels. Hotel occupancy rates decreased 1.2% year over year, so a little bit of softening there. Industrial showing slower expansion more recently. Industrial was like the hot commodity over the last few years, especially obviously when all retail shut down. All of online and distribution centers needing to be closer to points of delivery. That made industrial go crazy. Obviously, labor and the construction industry, people wanted some of those industrial types of properties for their businesses. So industrial was just so hot over the last 3 years. That's starting to plateau and pull back a little bit. And then we've got office vacancies continue to rise. And according to Lawrence Yun, they expect that to continue in the next couple of years, bringing the opportunity to convert these spaces into housing, retail, and even medical and educational spaces. So when you see vacancies go up, demand slows, prices pull back, they're eventually going to fall in line where the prices and the values of those assets actually align with the economics of redeveloping them into additional inventory that may be for different uses than they were once than the office was created for, right? Yeah. So that'll be interesting to see how that all plays out and how the market absorbs that. Multifamily demand is rising with higher housing costs, but so is multifamily vacancy, which is interesting. And that is due to overproduction, a lot of delivery of multifamily units in certain markets. They were overbuilt and some of the demand has plateaued in those markets. So some interesting data coming out overall on kind of the macro picture there, obviously depending market by market. It really just depends on what kind of asset class, what your investment strategy is, right? And seeing can you make the economics of those properties align with the yields that investors are looking to get, which is still why many investors are sitting on the sideline, just waiting to see how things shake out, where do rates end up by the end of the year.
Yep.
And a lot of people just don't want to be first off the fence. Now, I will say, in any market, opportunistic deals are out there. You can find those deals. Now, understanding
Always.
Economic cycles and how your investment strategy pairs with that cycle is really important. But I think that in any market cycle, opportunities are out there. You just got to look a lot harder. And that really ties into if you're a real estate investor and you're thinking about real estate investing. I know you just talked with a real estate investor or somebody that was aspiring to get into real estate, yep. Right? It's hard.
Yeah, the person was like W-2'd and tried a few months to not be W-2'd and do real estate investing. And what they decided is because the market that they're in, they're like, it's just too much time and I don't have the experience. I don't know if I'm going to make a right decision. It's too big of a risk and I need to support my family. So I'm just going to go back, and I'm glad I know that now because I wouldn't have known that without trying. Mm-hmm. But A lot of people think they get sucked in with the word passive income, and they don't understand that is like the biggest lie ever in real estate. It's not passive income unless you literally don't do anything, which you can't with real estate.
No, unless you're invested in a fund or a syndication where you're just getting a dividend check on a quarterly basis,
or
that's
like
passive.
a liquid REIT like we buy. Sure, that's passive, but when you own real estate, it cannot be passive, or your assets are going to depreciate. They're not going to appreciate.
100%. And I'll just leave it with this, because I have talked to many aspiring real estate investors, and always talk with aspiring real estate investors, and those that kind of romanticize mailbox money and passive income, right? It's a fallacy. You got to treat your assets and your real estate business like a business. And that's hard. And it takes time to get the momentum as well, right? To create a team and build in leverage and get a little bit more time freedom back, just like any business or entrepreneurial endeavor. But I saw this thread from a guy I follow on Twitter on real estate. He shared something that I thought was good to leave with anybody that's thinking about real estate investing. Some hard real estate truths. And these are 6 that he said are off the top of my head. Number 1 is real estate is really hard, even for those at the top of the game. And I was thinking about that. I talk with a lot of successful real estate investors. I know a lot of guys in GoBundance and in my mastermind and other mastermind groups that I'm a part of. And real estate's still hard for the guys that have $50, $100, $200, $500 million portfolios. It doesn't stop getting harder.
No, it does not.
Too much debt will wipe you away faster than you ever thought possible. We've seen that.
Robert Kiyosaki.
Over leveraged, right? When the tide pulls back, you see who's swimming naked. Real estate is risky. And if you are doing well enough, though you have not gained expertise, that gives you an edge. You're getting lucky, or you caught a bull run. Those both end eventually. Expertise does not end. And I think that's also, I remember one of my mentors saying, everybody looks good in a bull market. You can afford to make mistakes in a bull market, but if you don't master a true skill set within your craft of real estate investing, then you're going to get caught at some point with your hand in the cookie jar. So you really have to master some aspect of real estate investing, a specific strategy, right systems, right team, right? And those are things that can insulate you from some of that risk, some of that volatility. But volatility is the price you pay to getting rich, right?
It returns, man. It is the small price.
Number 4 was finding great deals is hard. Going back to the point that your buddy was talking about, it's really hard, especially in a market like right now. The beautiful thing is they're out there. And for the people that are willing to work really hard, which is few and far between in the real estate world, because most people think it's get rich quick, easy, it's just going to fall into my lap. That's just not the case. So knowing that it's going to be hard and having that mentality and that mindset to be able to push through the grit, have the stamina that's necessary for success. This on your side of the fence and challenging markets, right? You just got to keep putting one foot in front of the other.
Yep.
Number 5 was finding a great deal via 1031 exchange is nearly impossible.
Amen.
The odds you happen to find the exact deal size with the right amount of debt, all in the 45-day period, are next to none. Most overpay, thereby offsetting most of the taxes that they were looking to save. Thought that was an interesting point. And then the last one is, it's hard to make great money your first 5 years, and the real money starts to hit and get sexy in year 10. So if you think that's too long, then real estate investing is not for you. And I was like, man, those are some pretty good points to share with new real estate investors that might be thinking they're going to come in. Because I remember when I first got into real estate, I was like, oh, dude, I'm going to be on a private jet and I'm going to be in my mansion within 12 months' time. And man, did I realize 18 months into it, that was not the case.
Yeah.
So again, you hear me talk about it on the podcast, crock pot over microwave, right? Same thing in your side of the fence on wealth building. It's, you got to play the long-term game, master the strategies, be committed to the process, surround yourself with the right people. It's not some magic formula. It's just having the grit and the discipline to execute on the boring formula over and over again until you get great at it.
Yep. And it's really no more complicated than that, but people will consistently not believe that and make it overcomplicated, and so we will always have a job, Matt.
That is true. Thank you guys for tuning in today, each and every week. We love to dig into all of these topics that impact you, your money, and of course your lifestyle, the wealth that you are looking to build. If you enjoyed the show, all we ask, 60 seconds, take the time to leave a review, Spotify, SoundCloud, Google Play, Apple iTunes, whatever it is. We appreciate it. It's the best way you can support us. And as well, don't forget to check out millionairemindcast.com. If you haven't connected with Ryan and his amazing team to get your free financial portfolio review and x-ray, you can text the word x-ray to 844-447-1555. If you're an accredited investor and you're not on my deals list and you want to be notified of the opportunities that I put out to my network, you can text the word deals to that same phone number, deals to 844-447-1555.
You got it.
And with that being said, we'll see you guys in next week's episode. Keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.
Cheers, y'all.